Morning, everybody. Morning, all. How are we doing? Happy Tuesday. It is Tuesday. Morning, Danny. Morning, DK, even. Morning, Sarah. Morning, Evil. Morning, FTNet. How are we all doing? Anybody else coming in? I can't see how many people are in here in these member streams, so it's really annoying. But anyway. Right. So today we're going to, this is the new sort of format for the member streams. Going to do a couple a week, basically. Might do 3 a week, depending on what's going on and what we're doing. But just going to slot them in as we can, really. So today's plan is to have a look at Phil's lazy trader strategy. And the plan was to look at the back testing. The problem, where's my back testing folder gone? Sorry, one sec. The problem is there seems to be an issue with MT4, and I've also tested this in MT5, and it seems to be the same issue in MT5 as well. They have a problem with the fib calculations in the optimizer. So I'm just trying to find my backtesting folder. There we go. Easy trader, system parameter permutation. There we go. So yeah, so basically the plan today was to do that testing, but obviously there's a problem with the EA, as Evil pointed out. So what we're going to do is we're going to look at a variation on it using ADR instead, and a different way to get into the same basically strategy. So I'm going to go through that this morning, but basically I spent pretty much half a day doing system parameter permutation tests across every currency pair. As you can see here, I tested every pair with the EA, and I was testing exit time, ADR distance, and maximum number of trades. And then, as Evil pointed out, when you actually run the test with those parameters in the normal strategy test, you get a different result. So let me just show you quickly. So this is the original EA. So if we run a system parameter permutation test with this, so what I'm going to do is just do the initial lot size. Basically, I'm going to vary that from 0.1 to 0.3. Let's move that down. So I'm just going to run that as a system parameter permutation test, just over a year on a bit, just so we can see the result. It won't take long to run. Oh, Jesus, my volume's loud. So there's the results. So we've got 1,490 negative profit off of 212 trades. So if I load that input parameter and then run the test, not in optimization mode, it should give us 1,490 loss with 212 trades. What we actually get is 1,490 lots with 212 trades. That's not what happened. Is that the right EA? That hasn't worked at all. Let me just rerun that. What's going on? Okay, let me just let me change over to a different test with lot multiplier. Let me just run that again. That's the first time that's done that. It hasn't worked. So let me just run that again. Okay, so I've run two tests, 1490 off of 212 and 1783 off of 218. Let me set that input parameter and run that. So we should get 1782 off of 218 trades. Confused.com. Let me run that over a different period of time. So I just need to check this because this is the first time this has done this. It hasn't been working at all with the fib. Okay, so 5105 on 387. Let me just make sure that's putting the right parameter in. 1.3. 1.3. 5105, 387. Confused.com. As Evil pointed out, this hasn't been working. This is the same EA that I've given you. Nothing different. It seems to now be working. This wasn't working at all yesterday. I spent ages on this. I spent an entire day yesterday trying to figure out where the issue was, and it was with the fib. So let me just check I'm using the right EA here, because that's bizarre. Just going to do a visual test just to make sure it's doing what it should be doing. This is the wrong EA. Right, okay. That explains why it's working, because it's not using a fib. Right, okay. That confused me a lot. Right, okay. So basically, where's the EA? Okay. Well, basically, I was working on the EA yesterday trying to figure it out. That's why. So basically, it doesn't work. The original one that I gave you, as you know, if you've been testing it. So take it from me, it doesn't work, as Evil's pointed out. Right. So what I've done is I've obviously recoded that one, and then I thought, I know, I'll rename it to this, and I've basically not done that. I've just overwritten the old version. So what I've done is I've created version 2. And basically, just to recap the strategy, for those that are confused as hell, which is probably quite a few of you at the moment, basically what the strategy does is as price moves every day, what it does is basically when we have an up day, at the end of the day, at a specific time, it basically does the opposite to what price has done. So it sells, okay? And the original strategy was at that point in time at 9 p.m. UK, which is what we're using, it will basically put a sell order in and it will look for a 38 retracement, okay? So that is what the original strategy did. And then if it gets to that target, brilliant. The next day it rinses and repeats the process. I discovered an issue with the strategy, which I'll cover in a sec, which I've implemented something to hopefully fix. So that's basically what the strategy did. If we didn't get target hit and it pushed up again, we would just take another entry basically at a minimum ADR distance apart and repeat the process. And then as the price pushes back down with these two positions on, so it's a position trading strategy, it will exit with a break even or break even plus commission. Yeah. So what I've got in my inputs is targeting $10, which is that target there, target for multiple positions, just to get us out the trade. So it worked pretty well. I did a load of system parameter permutation testing with it to test whether it was better to get out after a period of time, how far apart we should space the entries, and how many maximum trades we should have before we start closing trades out. So there's an input in here which allows you basically to close those trades out if you get too many. So down here in the lazy trader settings, that's the time it triggers. That's the target for multiple entries. So if we don't hit target, we get out at $10 or 10 whatever your currencies is. Close the oldest trade if a maximum number is hit. So if we get into a trade short after a push and it doesn't work out, and it takes a second one and it doesn't work out, and it takes a third one, it doesn't work out, if it goes on from there, we will start to close out the oldest position. So it's drawdown control. And the price must right, so that's the other one I've added into this version, which I'll cover in a sec. So that's the original strategy. The problem is the fib doesn't work in the optimizer. So the EA that I put out in the members area, you can use it absolutely fine in visual mode or non-visual mode, yeah, and it will run absolutely no problem at all. When you put it into the optimizer, for some reason, there's some logic issue with the standard fib, and the EA uses basically the standard fib that comes with MT4. So it uses that, and it didn't work. So you get completely different results in the optimizer to what you would have actually got. So what I found when I was testing it from what Evil said was I was getting twice as many trades executed in some cases than it was actually doing. So there is some bug, and I don't know what it is. I haven't managed to track it down. So what I've done is I have rebuilt the EA so that it doesn't use fib. But if you think about what the strategy is doing, it's basically saying, if we have an up day, get me in up here, and I want you to target a 38 retracement. Now, we did some testing with this. I tested the 23 retracement, the 38 retracement, and the 50 retracement, and the results are not much different. Basically, after an up day, you're going to get some kind of pullback, even if it continues the vast majority of the time. And that's where the edge in the strategy lies, in the fact that market just moves up and down. If you look at any daily candle, you've got wicks. What we're doing is we're saying, get me out if it reverses, get me out if it has indecision, or get me out if it wicks down and carries on where it's going. So that's the strategy. The distance, it pulls back. There's very little between those three here, look. Yeah, so we're talking here about 20 pips on this. The ADR on this is 55. So what I decided to do was, to make it work, rather than using fib, I'm just going to use ADR. So when we get a push up, I'm going to get in exactly the same as the strategy dictates initially, but I am going to target a percentage of ADR. So what I've done is, in the version 2, is I've rebuilt the EA, and as you can see down here, we've got a multiple of ADR for the take profit. So what this is doing now is saying, get me in short and target a 0.4 or a 0.3 or a 0.5 or whatever point ADR pullback you want. So we're assuming, because we've had a bull day, we're going to pull back a bit. How much? Don't know. But as long as it's less than half an ADR, there's a high probability of that happening, because it's pretty much the same as a fib pullback. Same stuff, isn't it, really? At the end of the day, it's no different to getting in on an ADR reversal on the position trader EA. When you think about it, it's the same strategy, or a variation of the same strategy. So what I've done is I've programmed that in. So now we can just target an ADR pullback. And I've also put a filter in where the price must be within a percentage of the high low. So when I was doing my testing with this strategy, what I identified was, you get days like this where you open here and you close here. Okay. And it's a very tiny little day. So what you find in the EA is it's targeting these tiny little profit targets, which are absolutely micro. So it gets you into some trades, but there's absolutely no point in being in them, because you're looking for like 5 pips. So you're risking money for 5 pips profit. It's just pointless to do. So what I've identified is that those ones, although they worked, what they did was they gave you a massive strike rate, but no return. So I put a filter in to say that the close here at 9 p.m. has to be within a percentage of the high of the day. So if we're going to take those ones, basically, we have to, for example, here, look, we have to be in the top third of the candle. So if we look at a daily candle, yeah, that's your close there. Yeah, so we have to be, that wick there cannot be more than 30% of the entire day's range, or 20% or 10% or whatever you want to set. It's a variable, so we can robustness test it. Yeah, so for example, that candle there, that wouldn't have taken a trade. Yes, it's pushed up, but that is a very big rejection. It's already done the pullback. Yeah, so what we don't want to do is get in. That would be perfect. Yeah, get a little pullback off of that, would have got it the next day. But we don't want to get in on this type of candlestick, because the pullback has already happened. The next day, it's just taken off in the same direction. So we want what we call a strong close candle. We can't have too big a wick on the top. Yeah. So what I've done is I've introduced a filter to allow that to be a variable. So if you look down here, we now have price must be within this percent of the high or the low. So as we push up, there's your high. It can't have pulled back more than, in this case, 30% of the entire candlestick. Yeah. So from the low to the high, we've got to be within that 30%. So it basically means we can only get in on strong closed candles. So I'll just run this on visual, and I'll do it with every tick so that it's easy to see. He says, I'm checking every visual mode. Go away. You've got optimization set on. Let me just reset it so I just make sure it's got the right inputs. That'll do. I'm just going to target 0.3 of an ADR at the moment. Okay. Oh my God. I can't operate this morning for some reason. It's going to be one of those mornings. Morning, everybody else I haven't said hello to, by the way. Morning. I've forgotten how to pronounce your name, Volchek. Hatch Happy, morning. Evil, this also addresses the fact on very small daily candles, the fib target would be very close. Yeah. So it's to say, yeah, we're targeting that. Morning, Phil. So basically that's basically what this is doing. So if I just run the test, you'll see we get down there. Okay. So this is basically 9 p.m. UK. And the candle high is there. The candle low is there. And the trigger of the order is there. So the distance there is less than 30% of the entire day's range, which is that. Yeah. So basically what I want is I want us to close. So I want us to take trades somewhere down here. So at least after this exhaustion move, or after this big strong move, there's a chance it's going to have an exhaustion pullback. Yeah. And this target here is 1/3 of an ADR. ADR is 1,301. The TP is 390. Yeah, so that's 0.3. If we get the calculator out. So 1301 is ADR times 30% equals 390. Yeah, so there's your ADR target. 39 pips in this case. So what it'll do now is basically take a trade long. And if we don't hit the target that day, which we did, if we do hit the target, obviously it then does the same thing again. So there's the low of the day, there's the high of the day. We closed pretty much on the high of the day. So this candle will look like that. Tiny little wick, bull candle. Yeah, so we're now saying, right, you've had a big bull day. Look for a pullback. Now, this is ADR. Now, in Phil's original strategy, what we would be doing is we would be looking for a fib retracement. So the difference between this variation on the strategy is, take it from the actual entry point, Phil would be targeting that. I am targeting that because although this is a big bull candle, it's a small daily candle in comparison to the average daily range that we usually trade. So there's still a very high probability, if we're going to have a pullback continuation, that that candle is going to be more around about the 130 pip range. So it doesn't make sense to have a tiny little target when there's probably more on the table available. So we can adjust and test these ADR targets, obviously, because they're a variable. So this is something we would do a system permutation test on. So going for a short, didn't work out. Okay, we ended in profit on the day, so it's closed. Yeah. So again, the other variation, and I spoke to Phil about this. If you get into a trade, right, and it's in profit the next day, there's no point in not taking the money, right? This is a intraday scalping strategy. The purpose of this strategy is we're saying we've had a big day, we want to retrace some of that. So I either want you to retrace and hit my target, or if you've retraced and haven't hit my target, give me the money. Yeah, there's no point in staying in the trade. So basically that one just gets out. That one there was not a trade because, as you can see, there's the high and low of the day, and it's somewhere around about the middle. So it's not a bull day. That candlestick, yeah, looks like that. Yeah, high, low. It's a basically indecision candle. If you haven't gone long, you haven't gone short. I don't know which way to trade, so I'm not going to trade. Yeah. So I let it run out. So no opportunities to trade. And this is the filter working basically now, saying I don't know which way to trade because these candlesticks are indecision candlesticks. Yeah. So we had a short there, got out. We've gone long. We haven't managed to get out of this one. We've pushed down. So we're still waiting. Right, now we've got a profit. Take the profit. Yeah, so this day didn't hit the target. The target was here. Yeah, we had 3 days worth of really not sure which way to go. Okay, brilliant. Have I got a profit? Take it. Get it out. Get it in the P&L. There's no point in hoping, because the trade idea here is invalidated. It didn't work. So we get out. Yeah. So next trade, sell short, looking for 0.3 of an ADR. ADR is 1340. We're looking for 400 or 40 pips. Okay. Didn't manage to hit target. Did have an opportunity to exit the trade. Out. Done. Yeah. So the nice thing about this strategy is it is an intraday strategy in the fact that if possible, and the vast majority of the time, you're just going to get out. If it doesn't get the target, you don't get the retracement, you just take whatever you get. Yeah. So that just missed target. That was unfortunate. Look. That was your target. Yeah. And again, system parameter permutation testing will show us how much of the time a third of an ADR or a quarter of an ADR or whatever of an ADR will get hit. But just missed target. So we actually just took a small profit instead of a bigger profit, but we didn't take a loss basically. So, so that's basically the way the strategies work, or this variation of the strategy that I've done works. So again, out because we didn't manage to get anywhere. This one, target hit. So that's the new logic that I've programmed in. And again, this one here, good example of that new filter. We opened up here. That was our open. We pushed down to there, we pushed up to there, we closed here, or that was where the trigger would have been. But you can see the distance there, that candlestick on a daily chart looks like that. We don't want to be taking these because with Phil's variation on the strategy, he would be targeting a 38 retracement of that. Yeah, there's just no point because there's hardly any money there. I mean, there is a point, it's money at the end of the day, isn't it? And it would have hit that target. So they, both variations work, but having that extra filter in there, I think will give it a little bit more of an edge when the market's moving. When the market's not moving or is in indecision, we just won't get involved with it. So here's a good example. We've got 2 trades on now. That first one didn't work. That second one at the moment still isn't working. So we're just basically going to sit in this and wait and see where the market goes next. If the market continues to push and gives us another signal to get short, we'll get short. If it pushes down and gives us an exit, we'll get out, which is not doing either of at the moment. So we've got 3 positions on short. Now, this is the downfall of this strategy. When it doesn't work, which is around about 30% of the time, you have to sit in it. And that's just trading at the end of the day. So we've taken $310 worth of drawdown or so here. Hopefully, there we go. There we go. So we got out there. So basically, that trade there, we got out at a break even. So it didn't work out. So we just waited until the market gave us an exit opportunity at break even. We took it. Yeah, and then repeat, basically reset, repeat. So that's what I've done to adjust the strategy. And obviously we can do some testing based on this, but while I've been working on it, as you can see, it's very, very, very similar to the ADR reversal strategy that I already have in place with the Position Trader EA. Yeah, so the ADR reversal strategy, we wait for price to push above ADR, we get in with a short, and then we look for a retracement. So you can actually already trade virtually the same strategy as Phil's original one with the fib pullback, or this variation without the fib, but doing pretty much the same thing with the Position Trader EA. Does the same thing already, because all we're looking for is a push, and then we want to take profit on a pullback with a mean reversion strategy. This is a mean reversion strategy, same as ADR reversals, same as RSI reversals, same thing, isn't it? Basically, at the end of the day, just a variation on it in the fact that it is much more scalpy, and we're not looking for ADR to be extended. We're just looking for an up day or a down day that is not weak. We're looking for a strong down day, a strong up day, and we're assuming that the market is going to do what the market does, which is continuously go up and down all the time. Even if it's going up, when it's going up, it's coming down while it's going up. Yeah, pullbacks. So it's a good mean reversion strategy. This is running on every tick, so it's quite slow. But if I whack it into control points, and let that run. You can see it's pretty good. Yeah, but it does hit when something goes into a trend, as it's going to do now. It does hit stagnation. Yeah, there's nothing you can do about that. It's a mean reversion strategy in a trend. It ain't going to work, right? So there's variations we can do with system parameter permutation testing with this version, basically to see what is the best thing to do, identify where the pitfalls are, and obviously test multiple currencies to see which ones work and which ones don't. I'm pretty sure if I apply this to a yen pair, which I haven't actually done because I only finished coding this at about 5 o'clock last night. If we apply it to a yen pair, you'll probably find it will hemorrhage, because obviously the yen is a trend pair. So it probably won't have anywhere near as good results. So it's drawn down there quite substantially because it's obviously got into a strong trend. There it is. It's trending again. Now it's trending again. Yeah, it's making its money back when the market's nice and flat. A little bit more of a trend gone in, a little bit more of a drawdown. Yeah, but the nice thing is, look at, I was going to say, look at the profitability. It's dropped 3K, 2,800, and it took 5 grand's worth of drawdown. So this is, I don't know if this is a 100K account because we're using fixed lot size, so it doesn't really matter what the account size is, but it's taken 5K a drawdown. And this is a 50K account, so that would have been 10%, but we're using fixed lot sizing on it. So, so yeah, it's got a lot of potential for, I've just done a test on Aussie CAD. Let's choose something else. Pound US dollar, because that had quite a squeezy period this year. Let's see what that does. So the next stage is do system parameter permutation on testing now that we know this works, because it didn't work with the fib. So I'm going to contact MQL5 about it and see what the issue is there. But there's definitely some issue with the fib calculations only in the optimizer. So there's obviously a way that the optimizer works. And the thing that's different with this strategy to any other strategy that I've built is this uses drawings rather than price points. So when you're coding, what normally happens is you say, give me the high of the day or the low of the day, and it will basically store a price point. What the fib in MetaTrader does is it draws the fib on the chart, and then it uses the level, which is a drawing, to extract the price. What I think is happening is in the optimizer is using this drawing tool in a different way to it does in the normal visual or normal strategy tester run. I think that's where there's a bug with the actual way that this is drawn within the optimizer, because the optimizer is working a lot faster to get a lot more testing done. So I think there's some kind of weird bug in there. But yeah, this is pound US dollar just off the cuff. I've never tested this before. So we've made a couple of grand there. Took 6K a drawdown. It's always going to give you some kind of negative on that. It's a position trading strategy. We always take more drawdown than we make. That's position trading. That's what it is. So yeah, there you go. So next stage from here is to do some system parameter permutation testing with variations on multiples of ADR to see whether it's best to target 0.2, and I go up in 0.1 increments, maybe up to 0.5. I want to test the price difference, maybe from 10 to 50% of the candle. So basically I'm saying that candle there, when we enter, I want to test whether or not it's okay for it to be here, 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 or here. I want to see how many of those variations come out as profitable, just to make sure it's robust and it doesn't matter what price does in the future, as long as it's closing above 50% of the range, that sort of thing. Number of oldest candles, we can test that as a variation as well. So we could say, should I be getting out after one trade, or should I let it run for a bit up to maybe 6? Target for multiple entry positions, basically. So this is, we haven't hit target at the end of the day when we're just about to take the next trade. We haven't got a profit, so we're going to have to scale in. should we be going for a big profit, or should we just be trying to get out of those as fast as possible? So that is something you can use to test with as well. And obviously there's other things we can apply to it, like trend filters. Should we be going only with the trend? Yeah. I doubt very much whether that will make a difference, but that's something also that can be tested. Trailing stops, not so much, because we don't use a stop loss. We can't use that. Exit end of day, that is already built in anyway. Money targets, it's a TP based strategy, so that's not going to affect it. The only other thing we can do is exiting after an amount of time. So we could say, right, I'm going to get in and I'm going to give it 24, 48 or whatever days, and if a trade hasn't panned out within that time period, cut it. Yeah, so it may be that in the instance we just looked at a minute ago, where we had a trade go in and then we had another trade go in and we just sat around like that for 3 days, maybe we should be saying, if it hasn't panned out within a week, scrap it. Yeah, start the cycle again, take those losses. So that's something else that is probably a good test to run. Amount of time. Trading times is irrelevant because we are taking trades exactly at 9 p.m. every single day, so it doesn't matter. And the other system parameter permutation test, which is good to run, is percentage of ADR between positions. So I've got it set to half an ADR. So this input here for targeting is at the moment set at 1/3 of an ADR. It might be that we should be trying to get in tighter. So if the first trade doesn't work out, we should be getting in quick and trying to get that break even fast. And then obviously if we get 3 trades on, we start scrapping the oldest trade. So it may be that the spacing needs to be looked at as well. So that is another variation. So on that system parameter permutation test that I was running when we discovered it wasn't working, exit time in days I was testing, ADR distance I was testing, and the maximum number of trades. So this is the system parameter permutation test that I was running, which is pretty much what I've just covered. It's ticking that box there, and the exit after time, that box there. Yeah, so I've got it set to exit after 5 days at the moment as default. So that's another permutation test that we could run. Should we just be getting out after 2 days? So we'll give it a day. If we haven't made a profit, what about the next day? If we've not made a profit, scrap it. Yeah, we can test that up to maybe 5 days, so test it up to a week. So those are the tests I think that are worth running on this. I think probably something like 0.2 in 0.1 increments up to 0.7, which is about 3/4 of an ADR. We could go up to 1 ADR, I guess. That give us more permutations to test. This will be a much bigger test. But those are the tests that I think is worth running. The exit number of days one, we could try that with and without exiting number of days. The problem with this is every time you set a true false as a system parameter permutation, you double the number of entries. So if we had, let's say, for example, let's just run this test actually quickly. This can all be done on control points as well because it works on candle close. Everything works on candle close in this. So let me just see how many runs this is going to do. Just give us an idea on time per pair. 1 hour 47, and it's going to do 4,300 tests. Yeah. Now, if I put this input for time as a true false, yeah, that was 4,300 tests over 1.5 hours ish. If I do that test now, we get over 8,000 tests. So the problem with true false inputs, because they're Boolean, 8,640 now, we're going to be 3.5 hours in this test, is we have to test everything, and then we have to test everything again, but decide not to get out after a number of days. It's a much bigger test, and it will give you a lot more data in one run, but obviously it's going to take twice as long. So what I would normally do initially is either do a test with that turned off and just test the main system parameters, and then look at, okay, we've got some good results here, but can we improve them by exiting after a number of days and turn that to true? So with that turned off, we are just literally going to test the main strategy without that exit criteria. And that will run a much faster test, which will probably give us somewhere in the region of 1,000, 1,500 variants. Yeah, 1,080, and it's going to take 26 minutes. So that's a pretty good test to run. And it will also give us, obviously, everything that doesn't work. So ADR distance being really close together with closing out after one trade is not profitable. So we know that we need more than one entry. Otherwise, it's just basically a stop-loss based strategy, isn't it? And as we increase the number of trades, we start to then make some profit. Can't quite see it, can you? So these negative numbers here are because basically we are getting out after one trade. Yeah. With a maximum wick of 10%. So we're probably taking fewer trades there. So we're going to profit when we're taking 2 trades. We're going to proper profit now, as I would call it, up into the thousands. Now we're taking 3 trades, and this is the sweet spot I found, was give it 3 days or give it 3 trades, which might play out over a period of 4 or 5 days. But give it quite a few trades basically to give the market time to breathe and time to do its thing. We're getting even more profitable now if we're going up into leaving it 4 or 5. But leaving it more trades is going to increase your drawdown. So there's always going to be a payoff. The drawdown is going to go up. You can see the drawdown percentages are now up in double figures because we're giving it more room to breathe. But it's still profitable. So those are the tests that I'm going to run. So that's basically the next sort of step, I think, with that. Anybody got any questions on it, on the strategy or anything to do with that, basically? Let me just quickly, while I'm doing that test, see what's going on with the DAX. So DAX, gutted. DAX was a clean break today. Just missed my target, and I've just been stopped out on the position short. Still 170 profit. Long break on the FTSE, underway. And it's election day today. Fun. We also had the overnight rate, which came out 4.35%. So nothing much moved. If we look at the ADRs, there's nothing hit ADR today so far. There's no RSIs either. So nothing much to look at. It's election day, so it's all about the US at the moment. I got out a load of US dollar CAD yesterday. Obviously, this has been an incredibly messy trade. Those aggressive drawdown control positions I had on all paid off, and I managed to get out with a very, very nice profit yesterday. I made back 2/3 of what I lost last month yesterday, and I've got a runner on short at the moment, which if what I think is going to happen to the US, because it looks like Kamala might have a very good chance of getting in, I think we're going to get a dump on the US. So I think this is all going to unravel. So I'm leaving this runner on at the moment. And if I can get a decent run on this one position here, this will pay for last month's loss, which would be lovely. I've also got Aussie US running as well. And obviously that's going to rally and do the opposite to US dollar CAD. So it's basically the same trade in reverse. So fingers crossed on those. Evil, I've tried yesterday on 5 pairs at 2300 broker candle. Opened a position in the opposite direction of the daily with the 23.6 fib. Target, all 5 closed this morning. All went to at least 38.2 or even or more. Yeah, so I mean, this is what I found when I was doing the testing, which we kind of pointed out in the group. It doesn't matter which retracement you use, really, because they're so close together. Even the 50, you know, that distance there on the grand scheme of things in a day is very achievable. So you're obviously going to get a higher strike rate targeting that than you will that and that. But the strike rate variation is very, very small. But, you know, this is, like I said, this is the same as the ADR reversal strategy. Remember, we've been through in the members sessions, there's only 3 strategies that exist in trading. Yeah. And there are only a handful of ways that you can exit the market to make money, right? So it's either a mean reversion strategy, it's a trend strategy, or it's a breakout strategy. Yeah. This is a mean reversion strategy. ADR reversals are a mean reversion strategy. The exit criteria that we are applying to this strategy is position trading. The exit criteria that we apply to the ADR reversal strategy is position trading. This strategy is waiting for price to have pushed and is mean reverting. The ADR reversal strategy is waiting for price to push and it is mean reverting. Yeah. So when you actually think about it, Phil, this is the same strategy as the ADR reversals. It's just being executed in a different way with a different entry criteria. My entry criteria are I need to have hit ADR at any point in the day to take a short. Your criteria are I need the price to have moved up to take a short. But you haven't got a distance variable on it. I have. That's the only difference between them. Neither of them is better or worse than the other. They're just different. But the exit criteria is the same. Either we get out on roughly a third of a pullback or a quarter of a pullback or whatever of a pullback. We are targeting a distance in pullback on the original move. Or if that doesn't work out, we're scaling in to wait for the market to come back in our direction. So what you've actually created, Phil, is the same as the ADR reversal strategy, just with a different rule set. It's the same methodology of trading. So they will both work. They should both work equally as well. The thing I like about this particular one is it isn't reliant on ADR. So the problem with ADR is, as we know, if you get a flat week like this, you don't trade. The beauty of this system is it trades every day. As long as you've had a move with a strong candle close somewhere in one market, which you will have in a lot of markets, and again, you can adjust that distance, can't you, in the variables. It's going to take a trade every day. So it's going to potentially, like Evil's just said, it's going to generate profit probably every day, but it's also going to probably get you into a few drawdown trades. And the Achilles heel in the strategy, which is exactly the same as the ADR reversal strategy, is it's going to take a lot of drawdown. So when it gets wrong, we are basically relying on the market to come and correct. How long that takes is a variable. It's not down to us and it's down to the market. So we have to have a drawdown control system built into the strategy. You can't just let it run. If you run the strategy and you set that close out old trades to something like 99, yeah. So I've got it set to 3, which is basically get in 3 times. If it ain't working, shut the oldest one. Just try and get us out of the trade with a break even. If you set that to 99, it's the equivalent of shutting your eyes, crossing your fingers and hoping it comes back. It's not going to work. It's going to blow the account at some point. The fact that you're also potentially using a lot multiplier of 1.1, which again you can alter. It's a variable in the EA. Means that you are incrementally increasing your lot size, which is keeping your average closer. But on a squeeze like we've just seen on the US dollar CAD, you're going to get into the same problem with the RSI mean reversion or the ADR mean reversion with the position trader EA, because it's the same methodology of trading, isn't it? So I'll get this version 2 finalized, not finalized, but I'll get all the inputs that you don't need, that don't work, I'm going to hide basically, so that you've only got inputs there that actually you can use, just to simplify the backtesting purpose. And then I'll stick this in the members group and you can go and have a play with it. But be aware that you are, so I've got a blocked eye duct and it's really constantly itchy there. Means I can't cry as well. But you bear in mind when you're testing this, you are testing something very, very similar to ADR reversal strategy with the position trader EA. It's just, I would class this as probably a more aggressive version of the ADR reversal strategy, and the fact that we're not waiting for price to have moved. We're just saying, get me in because you've moved. And there's nothing wrong with that. Get me in because you've moved. Because you've moved, you're likely to move again. And the likelihood is you're going to pull back because you've moved. So the thing I think is going to be the best test with this is that distance from there. So the top wick can't be more than 10%, 20%, 30%, 40%, whatever. I think that is going to be a variable which is going to have probably the most impact on success, because if you've got a really strong closed candle like that, where you've got a tiny little wick on the top, it may be that that is a large daily propulsion gap because of a news event. So, you know, it might be a variable that kind of makes or break the strategy. So I can't cry like a Klingon. Nope, I can't. If you're still in the US dollar, perhaps today is a good day to die. I put that little video together this morning as well. Did you see that? I was watching Trump's rally this morning. The one he did last night. He only finished it at 2 o'clock this morning in US time. But it was so funny to me. He said, "Never give up, never surrender." And I was just like, that's a quote from Galaxy Quest. And he's used it every rally. And he used it in the 2020 campaign as well. So he's basically nicked the quote from Galaxy Quest. And he started to use it. So I thought I'd put a little montage together of Galaxy Quest, because they use it a lot. By Grabthar's hammer. Anyway, so any questions on that at all as a strategy? Nice break on the DAX and the FTSE. Target is within yesterday's high on ADR, so easily achievable today. We are sitting in a propulsion gap on the hourly though, although it's not a very good propulsion gap. It's just part of that A-shaped recovery. That was probably a good exit as well on the DAX this morning. Nobody's got any questions? No? Cool. So yeah, so I'll get that EA. I'm pointing over there because that's where all the coding is. I'll get the EA, all the inputs that you just don't need. I'll get them all hidden away so that it's just simpler to understand. Yeah, and then do some testing. I'm running obviously that system parameter permutation test now on the pound US. So it's going to take, by the looks of it, somewhere in the region, for me anyway, on my PC, of about 45 minutes per test for 1,000 permutations. And I'm looking basically to see what is best and what isn't best to do. And then I can run some of these tests just to see in visual mode what the drawdown is like, what the real open max drawdown is like. Because this figure that you're going to get in here isn't going to be right, because obviously this is closed trades, not open drawdown. But if you're exiting after a small amount of trades, this isn't going to be far off what you would have actually taken in drawdown. So the thing we've got to be careful with this strategy, as with all position trading strategies, is exposure. So if you're taking multiple trades on the US dollar, because the US dollar's had an up day across all pairs and it all goes wrong at the same time, you are going to take a lot of drawdown on all US pairs. But some of them will get you out with a break even. One other input I might put into this, which I was thinking of, was potentially an exit after distance rather than after money to get out of the additional trades. But it's another variation that I might think about adding. So I'll see if I get the time to do that. But if not, I can release this version anyway. So on Thursday this week, we're going to do what I had planned, rather, was an inverse version of this strategy. So I built an EA, which basically was a breakout pullback EA. So it basically did exactly the same as this, but rather than getting in short and targeting a pullback, it places a pending order there and we get in on longs. Okay, and it works really well with yen and Swiss pairs. However, let me just actually show you it. I'll just stop this test because I can run this another time. It's this one, basically. So what this does... Oh, sorry, let's take it off optimization because it doesn't work. Ooh. So what this does is it does pretty much the same thing. So as you can see here, we've got a down day. Yeah. So what we're saying is stick a sell limit order if it pulls back and assume that we're going to continue the trend. So it's a trend pullback. So it's the same strategy in reverse. We're not mean reverting. We're waiting for the mean reversion to happen, and then we're entering. So it's a trend following strategy. So it's very, very similar in the way that it works, but the exit criteria are different. But I'll cover this more on Friday. Now, this works in the visual tester. Yeah. But again, in the back tester, in the optimization rather, it doesn't. So there's a problem with it. This isn't probably going to work on the pound US dollar because the pound US dollar isn't a trending pair. He says, proving himself wrong. It's not great, is it? It's not the best equity curve in the world because it's not a trending pair. Stand corrected. So that's made 1,800 off of a $1,000 drawdown. So there you go. So there's one on the chart you can see quite clearly there. So basically, we've got an up day. Yeah. So I'm saying basically stick a pending order at a 38 retracement. If we retrace 38 and continue the trend, stay. And we get out on a moving average exit. Yeah. So basically, you'll see some of the trades in here are very long because it's a trend strategy. Yeah. So we're... Oh, actually, yeah, I did have it set as a TP. So I think I've got a 5R or something TP. But it's also got a trending exit criteria on it. So we can use a moving average to get out of these as well. Obviously, trend strategies don't work in ranges. But we'll have a look at that one on Thursday. But... I might have to reprogram it to work in the same way with ADR rather than with fib, because at the end of the day, it's the same thing. If we have an update and we pull back a third, a half, or 3/4 of an ADR, which is basically a fib retracement-ish, isn't it? Get me in. So I can reprogram this one to work in the same way. So that's what we're going to do on Thursday. But we'll also have a look at the any testing that we've got on this as well. One thing that comes to mind is that with fib, the targets change every day as it uses the high-low of the day to the entry price, while ADR is more consistent. Yeah. So there's always going to be variables with every strategy that you can't control. With fib, the problem with fib is it's you are using yesterday's price action to try and get out on. If yesterday's price action is not the norm, you're not going to get consistency with it. However, with the system parameter permutation testing, if you can test different levels of fib and different distances on the candles and that sort of stuff, you can basically say, if I get in any day that is within these parameters, will it work? Yes, long term, it should be fine. So with ADR, we could, I mean, and this is the thing, this is why I say this is very similar to the ADR reversal strategy. The ADR reversal strategy measures the average daily range. If the market exceeds the average daily range, we look for a pullback percentage on that move. So if that is 125% of ADR, I'm looking for a third of an ADR pullback. I'm doing the same thing as a fib, except I'm using ADR. So I could create an indicator called the ADR fib, and what it does is it measures any day that exceeds ADR, and then it draws Fibonacci retracements on it. It's the same thing. You see what I mean? This strategy that Phil's got is very, 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 very similar to ADR reversals. And you can do all of this with the position trader EA with targets. Yeah. Everything you can do in this EA, you can do with the ADR reversal EA. You could even say, you know, with the position trader EA, you could even say, if we hit 80% of ADR, short it. But obviously, the difference with the ADR reversal strategy is it's dynamic, that it works intraday. This only works at 9 p.m. So the difference with this is we're getting in regardless at 9 p.m. With ADR, we could be getting in at 2 o'clock in the morning. We could be getting in at the start of the London session, anytime. It's has the market moved? And that's why I like ADR, because this is reliant on time, on things happening at specific times of day, or things having happened during the day and then analyzing them at a specific time of day. With ADR, it's dynamic throughout the day. So if it pushes in London, we'll get in London. If it pushes in New York, we'll get in New York. If it doesn't push at all during either session, we're not going to do anything. So we're only using momentum to get in with the ADR reversal strategy, whereas this is a little bit more fluid. So, but that doesn't mean it's a bad thing. Yeah. And this is what it's all about, diversification. If you trade the ADR reversal strategy and use the same exit criteria as we have here, so limit it to 3 trades, get out after a third of an ADR on 1 trade. If we've got more than 1 trade, get out at 0.01 ADR, get me out with a break even. And you can do all that with a position trader EA, can't you? You can replicate this, but using ADR. So if you run the ADR reversal strategy in that way, and you run this strategy in that way, what will happen is if you get an ADR hit, you'll get in sometime during the day. If you've had an ADR hit, you'll probably also get in on this strategy. But if there's no ADRs, this one will get you in. So there's an advantage to running both strategies, as far as I'm concerned. They both work, but they both do a very, very similar thing. So just bear that in mind when you're testing. Will it be better or worse? We'll have to find out. Yeah. You can compare the two. I mean, you can run this in the position trader EA. Let's go Aussie US. I'm considering removing my target from this. The only exposure I've got on now is that $1 US CAD short, which has got a stop loss here. So it's a break-even stop on it. So it's either going to not work or it's going to work. So that's the only exposure I've got on the US now today. And obviously this Aussie US as well. We are just testing yesterday's high. And we're almost at ADR. And it's also a monthly level as well. So this is a big, strong resistance. But obviously because it's the election, resistance is going to mean nothing. If this US dollar comes down hard, which, you know, it's got every possibility of doing, do I really want to get out here? But equally, do I want to be exposed in case? I'd much rather, I think, be flat. So I think, excuse me, I think I'll just take that off today. It's not enough profit really at the moment, but see if I can hit that today and I'll just get out of that. But I'm going to be very closely watching the US today because obviously the polls are open. So, or they are opening within the next few hours and it's starting to go. So there's going to be exit polls coming out throughout the next 24 hours. So there's potentially a lot of volatility coming in. And at any point, Trump could turn around and obviously say something and it all goes horribly wrong or right. I don't know. Could do anything, couldn't it? But just got to be very, very careful today. That's just paused exactly at yesterday's high. Look, limit orders. And we got that monthly level. So see if we can push through today. But certainly a weak US today. Other news today as well to be aware of. We've got PMIs this afternoon, which will add some volatility in. So there is a catalyst at 3 o'clock after the market opens. Excuse me, that's half an hour after market open this afternoon. There's volatility available for them to use to either stick a move in or undo a move. So just be aware. And obviously this is, I don't know how long the counting is going to take, but the kind of consensus in the press seems to be that we'll have a virtually secure understanding of who's going to win within 24 hours. So by this time tomorrow, we'll have a good idea with the exit polls as to what's going on. But obviously until everything's declared, which can take a long time and all the recounts are done, and it's going to be recounts. I'm not sure what's going to happen with the US. So, you know, everything's turned off at the moment, basically. I won't be trading the US this afternoon either. So it's just a case of managing what I've got really at the minute. I think that's all I wanted to cover today. So I'll get that done, the EA, and I'll stick it out in the members group. And then we've got 2 more interest rates on Thursday as well, haven't we? So this is a manic week this week. It's going to be fun. Very strong break on the FTSE today. Just going to move TP1 down slightly because we've got a weekly support here. So just in case we get a bounce off of this, is a double weekly level here, which we've already reacted at once, but it pushed through. So I'm just going to move that down a little bit. Right. Anybody got any other questions? Anything else they want to discuss? Anybody got anything else they want to look at in any way, shape, or form? Let me know. I still don't know how many people are in here, and I still haven't found out a way to figure it out. For some reason, there's a ban on member stream numbers that they report. YouTube, it's very annoying. I can't see how many people are here, so I may well be just sitting here talking to myself. And if that's the case, fine. I know Evil's here, yeah. But yeah, if anybody's got anything else to just look at, whatever, let me know now. Still here, good. Everybody's here, good. So that's really it for today. And obviously, just we'll carry on Thursday and have a look at the other variation of strategy. We'll also look at some results on this one as well. So I'll run some permutation tests. I've also got already set up another 4 strategies to look at, which are more daily variations. And I've got a 3-bar reversal price action variant set up in the Swiss Army knife as well to test 3-bar reversals intraday at highs and lows. So we're going to do some testing on that as well coming up, because I want to get more variation into my portfolio moving forward, because this last quarter has been an absolute nightmare. This, especially last month with this US dollar CAD squeeze, was awful. It's the worst month I've ever had. Luckily, I've made 2/3 of it back this month already, but not through normal strategy, through incredibly heavy aggressive drawdown control, which has just happened to play out in my favor. So what I'm going to be doing moving forward is, and partly why I'm doing these streams, is to develop some more strategies to run alongside position trading, just so that I've got more variation in the portfolio, because this year has been a real eye-opener for me. It's the first year I've not made the same as previous years, which you kind of expect anyway, but it's been substantially worse. So do I get access to Discord automatically? Yeah. If you link your account. So what you have to do, if you go to the post section, yeah, there's instructions here on how to link your YouTube account in Discord. So you go into the settings section, and then you basically link your YouTube and Discord accounts. And what it will do is it will identify in Discord that you're a member of the YouTube streams, and then you will automatically see the YouTube members section. But it'll automatically appear. It's basically here. So it's that one there, YouTube members. But you'll only see it if obviously you are a YouTube member. And it automatically kicks you out as well when you leave. So it's all automated. But I can't really add you manually into it because it's all done on membership. So some people have had a problem linking, a few people, but not. I think they've sorted it out. But there's something about YouTube. If you've got multiple users within one YouTube account or something, that doesn't work. I don't quite know why you would, but I guess if it's a family membership to YouTube or something, or I don't know. But that's how you do it. It's very it should be very simple. Oh, Nick Sean, look, he's still got his guns out. He's now hunting with a Hoover. He's using a Hoover. I only subscribe to him because he makes me laugh. It's very amusing. Right, that's it for today. If you've got anything else, I'll be in Discord. But this week is a little bit different with the lives. And moving forward, obviously, we're going to do this normal schedule where we're having two a week and maybe another members stream. I might fit another one in every now and again, depending on what we're doing. But tomorrow, I'm doing the afternoon session now as well. And that one basically is going to be tomorrow, obviously looking at what the hell's going on with the elections. So that should be a good stream tomorrow, because obviously we should know hopefully what is going on with the Trump scenario. So. All right, so try and stay as flat as you can this week, because I get the feeling we've got a potential bomb about to explode in the FX markets. It may not happen, but if it does happen, you just don't want to be on the wrong side of it. So stop losses, no problem. Position trading, get flat if you can. All right, have a good one. I will be back tomorrow afternoon and then member stream again on Thursday. But if you once I get the EA in the members area, if you want to do some testing, if you've got any questions on it, obviously just chuck them in the members section, and we'll see if we can get some profitable variations with the strategy. All right, so have a good day and I will see you next time.